Very good. Hello, everyone. My name is Julian Scan, and I'm delighted to be joined today for a fireside chat by Ron Kalifa, who led the Kalifa report into fintech. And Ron is going to give us some insights into the report and the wider financial institution market. Just before we ask Ron to come in virtually, I wanted to reflect a little bit on the 10 years or so of the FinTech programme in London. This is something that I've sponsored from the beginning and been delighted to do so within Accenture. The programme started, as many will know, in New York. We ran it in London the year after that, and then Hong Kong a couple of years down the line. And we've got upwards of 240 graduates from the programme who've raised in excess of $2 billion. And the success rate of these companies is materially better than the normal success rate for startups at the point we picked them up. And I couldn't be more honoured to lead this on behalf of Accenture. The context, of course, of the market 10 years ago and what fintech meant was completely different. We didn't really think about cloud as a viable part of the banking market. We hadn't seen, depending on the market, 20-30% of revenue loss from the incumbent financial sector to new players, and we hadn't envisaged of the extent to which the Asian market would present an integrated view of meeting customer demands, which really sets the new environment for how financial services will work in many people's opinion. And yet somehow the programme in London, which had as an original aim to bring the industry together with the new tech to make scale-ups happen, that is still relevant. And that is a surprise because we never really saw this going beyond 2 to 3 years. Every time we ask, people say this is still adding value. So I'm absolutely delighted about that. The thing we need to do as part of the Fintech Innovation Lab is really highlighted by the Kalifa report itself. Although the lab only can aim to contribute in execution to part of that agenda, it is a very real contribution looking forward that we must make. And I'd say the banks and the insurance companies who give their time in the 3 cities, I would challenge you to think more ambitiously about how quickly you get this tech to market and how quickly you scale it. I would challenge you to think more international, because the big challenge to increase the value for any country, including UK PLC, is to get the fintech to punch above the weight of the domestic market and to fill that Series B gap that was highlighted in the report. And the banks are well positioned to do that, but I think more aggression in terms of cutting through the red tape to get the solutions out there is needed and to get them to scale. I think professional services firm like Accenture's and tech services firm have also got to step up further and put more risk capital in the game themselves in developing the solutions and helping banks syndicate some of the costs of running fintech up to scale. And I think, finally, it is also important that the Fintech Lab itself, as part of that ecosystem, addresses the new balance sheet fintech, let's call them, the Stripes and the Adyen's and the Klarnas, and indeed WorldPay, and not just work with the incumbent sector, because the fintechs that started up 10, 15 years ago as balance sheet fintechs are now very much at scale. If I switch just for a moment to something else I wanted to put on your agenda, which is the topic of purpose. Accenture released a report this time last year, our first report on purpose in banking, which put forward the theory that purpose was tremendously important. It's not just tremendously important because there is a need for people to understand financial services better and to be helped to be better with their money, but because that is a viable strategy, in our opinion, for differentiating yourselves in what is a very crowded market now. We showed a correlation between bank success and a real focus on purpose. And in the midst of the pandemic, we backed that up with a B2B and a B2C survey, which reinforced a couple of interesting things. One, that actually the sense of trust has dipped in some segments in some markets towards banking suppliers in particular. and secondly, that the need coming out of the pandemic for the focus on purpose was even more important. What we're releasing next week is the next instalment in this, which brings more data around the case for purpose in an economic sense and the case for investing with purpose in the core banking products as a differentiator, and it uses a purpose-driven index using Arabesque as a trust score backed up by quantitative measures for both customer service and other aspects of product design that aims to help banks to use quantitative-based thinking for making investment choices and to put purpose at the front of that. So please watch out for that, and all feedback is welcome. With that, let me ask Ron to join me virtually. Ron Kalifa has been an executive at the top of the banking industry for many, many years. His most recent post has been as CEO of WorldPay at the time it was set up, and then vice chairman of WorldPay for the last few years. He was asked by HMT to lead the Kalifa report, and he laid out in a very ambitious way a very wide-ranging set of challenges and issues that needed to be dealt with, and was what a very comprehensive report. So I'm delighted to be joined by Ron. Welcome.
Great to be here.
Good stuff. So I mean, let's just kick it off. As I said, the report covers strategy. The report covers execution. There's an awful lot. There's a very wide range of a call to arms. What do you think is the most significant thing that the UK financial services industries have got to do?
Yeah, Julian, it's a great question. I think we need to, for one reason or other, we need to stop thinking about fintech as something that is separate or a subsector of financial services. It's very much, I think, the future of financial services. You know, fintech is as close to technology as it is to financial services. And fintech increasingly is not about a group of people, startups who are based in Shoreditch playing on an iPad. Not only do we have some great fintech companies in the UK, including unicorns such as TransferWise, or Wise as they're now called, Onfido, Checkout.com, Revolut, we're also seeing, I think, and witnessing the digital transformation of banks, of asset managers, of insurers, as they strive to meet the changing consumer and business demand. So I think the review was trying to ensure that we can continue to lead in this technological revolution. And I've tried to do that through, as you say, identify and define a strategy and a delivery model for a sector that I think is growing rapidly. It's going to grow threefold or so over the next 10 years. And the review set has been worked through 5 lenses. Those lenses are policy and regulation, skills, investment, international competitiveness, and national connectivity. I think the good news is that we have a really strong record in this space. UK fintech represents 10% of the global market share, and 2019 contributed £11 billion to our economy. There are many factors that I think help us. One is capital is strong. Investment into fintech stood at $4.1 billion in 2020, well ahead of our European counterparts, and frankly second place only to the States on a global basis. The other thing that we've got, which many of people watching this and your clients will be familiar with, is that our combination of financial and technical talent is unparalleled. And we've also set the benchmark for policy-led innovation through key initiatives, such as the FCA's regulatory sandbox, open banking. It's interesting, at least 50 countries have now replicated our regulatory sandbox. When we first launched it in 2017, we were the first, and now 50 countries have got that. So what the review is trying to do is to build on the success of all of these things and achieve more. So that's what I think, where some of the challenges are.
And I'm conscious in executing across those 5 domains, you're asking for a lot of government support and action by existing industry bodies on the skills agenda, in terms of the visas, in terms of accelerating standard setting and so forth. Things which have traditionally taken a long time. what sort of buy-in have you got, or do you think or how will you get it across such a wide group of agencies?
I mean, the report's been worked on now for about a year. So we've been working closely with different government bodies because everybody has an interest, a passion, an enthusiasm for it. So the report went in a couple of weeks ago, and it's a bit like writing a letter to Santa. So you write the letter into Santa, then you have to wait for Christmas Day for the presents to turn up in one form or other. So I think we're in that sort of interregnum at the moment when the Chancellor, his officials, the Economic Secretary of the Treasury are considering the report. There's a lot in there. And I suspect that they'll come back to us in the next couple of weeks, the next few weeks, and then tell us what they like and what they're going to help us with. I've tried also to make sure that I'm not asking too much of government in terms of regulatory change or things around equivalence or any of those aspects. I've tried to focus it so that the work is principally done in the private sector, but government helps by convening and unblocking some of the opportunities that are really there. There's been some very positive reactions, as many of you will have seen, around the tech visas, the talent pipeline that I identified. There's been some work that's already been done as it relates to the public listings. So I think the momentum is there, and it really is about looking at it not as a set of recommendations, but as a strategy, what needs to happen for the sector.
And do you think there's anything, did you find anything where, we're not doing it right? I mean, necessarily it's a very positive report and there's a lot to be positive about, but did you find anything where we should stop doing?
Not necessarily stop doing, because I think, as you say, we're doing some great things. We've started from a fantastic position, but we've sort of got there by stealth and just determination. It's interesting, as I've talked to different geographies and different markets. I've talked to Australia, France, UAE, Singapore, Canada, etc. And when I asked them, what is it that you're doing or they're doing as it relates to a fintech, they all gave me exactly the same answer, which is we basically watch what you do in the UK and we copy it, and we do it with real force and momentum. So I think we just need to make sure that the world isn't standing by, because people see the opportunities as it relates to fintech. But one area that I think we in the UK have got to get better at is scaling capital. In the UK, we don't have a problem with startups. We have a problem with scaling up and helping businesses to really achieve the opportunities that are in front of us. It's a pretty well established fact that there's a growth capital funding gap in the UK. It's actually across Europe, but it's particularly so in the UK. And this was identified as part of the British Patient Capital Review many years ago to fund, and the BPC was set up to fund venture firms to fill that gap. Great initiative by government, but it was using government money. What I've been trying to think through is how do we get private money so the government isn't being asked for anything else to come and help fill that gap. So it's taking some of the lessons from the creation of the Business Growth Fund, which was set up 10 years ago, challenging and at a very different time, different crisis, but to take some of those lessons and find a way to work with industry as to how to stand up a growth fund that helps companies and businesses grow. But it has industry participants as shareholders, insurers, pension funds primarily. But with the government helping in a couple of ways. One is to create some convening power, inserting some influence to make this happen. And the second is to look at the regulatory obstacles that currently prevent our domestic insurers and pension funds from investing in growth companies. There's a lot of work that's already going on, but that's the sort of things that I think need to be done, which are significant, will actually make a difference to the broader agenda and the broader opportunity that we've got in terms of in the sector.
If I just built on that, and your point you made at the very beginning was this is largely about technology. Now, the way technology has scaled historically is because tech players focus on a vertical and build a solution that's then reused, and everyone benefits from the standardization. At the moment, in the core banking areas and core insurance areas, there's a lot of stuff that's very specific to each organization. If I put that together, what you said there about the sort of funding gap, you could conclude that the banks themselves should be investing more to fill some of that gap, to see some of these solutions through, and maybe maybe of, as you say in the report, give an exit by these owners, which is not a sort of hands-off exit, but they stay more involved. Do you think that's sound thinking, or do you think it's just not feasible? The banks will get more into the kind of VC world because that's just not what they do.
Yeah, I don't think it's about banks alone. I mean, I think there's a broader agenda here. Banks have got some seriously difficult things to do. Many of them are coping with legacy infrastructures. So as you'll know, it's very hard for legacy infrastructures to kind of be broken out of and for additional spend, because they've got shareholders, they've got investors, they've got obligations they've got to meet, and they're playing to a very broad church. Where I think the opportunity tends to lie is finding ways to collaborate between incumbents, let's call them that, large players, and the smaller ones, because the smaller ones typically have more agility, more flexibility to do certain things. But the big banks typically have got the regulator looking over their shoulder to say, don't make a mistake. So we've got to find a way to create an environment where the big players, the big banks, can find ways to work with the smaller, more agile organizations, but at the same time, not have the concern that if something goes wrong, there's going to be a problem on them, on the big players. So one of the suggestions is that we operate a scale box. So a scale box is basically taking the regulatory sandbox that we've currently got, which the FCA established and has done a fantastic job with, and find ways to take that to the next level in terms of next size of organization. And by doing that, what that will do is allow greater experimentation and potentially, I hope, partnerships and collaboration between small and large players, let's call them that, so that there's more opportunities to test, to try, run things without having a concern that something can go wrong and it's not in a controlled environment. So I think that's one example of how this is going to happen. But big banks have got a big responsibility. They've got customers, they've got a significant number of customers, and the smaller players want to find ways to get to those customers. So they're trying to get access to distribution, and the big players, the big banks, are trying to find access to agility. So I think there's a potential marriage there on the basis that everybody is open-minded about how to make that work.
Since I've got you, I maybe just ask your opinion on my purpose point. I don't know if you heard the points I was making around purpose. Do you think that purpose and profit can coexist, or is that just something that would be nice to be the case, but ultimately Milton Friedman's right, and you just got to focus on making money?
Yeah, I'm a great fan of Friedman, but the reality is I think purpose really can exist with profit. They're not mutually exclusive, and actually I think if the pandemic has shone a light on many, many things, one of them is it's made people reflect on themselves, their businesses, and also their legacy in terms of what they're looking to do. So I think if you think about the financial services sector, we've seen sustainable finance take off over the last few years. People are now asking more of their money. They want social and environmental benefits alongside financial returns. The UK is third in the world behind US and China for investment into impact technology, as it's called, or impact tech, which has increased 160% since 2018. And in particular, I think fintech can play a significant role in increasing access to financial services for low-income households and SMEs. Despite priding ourselves as a global leader in financial services, financial inclusion remains a significant challenge for 21st century Britain. And around 1 million people don't have a bank account, and 12 million adults have little or no confidence in their ability to manage money. So technology, I think, can change this, can help this, and these changes have been in motion for several years. But as I said, COVID has been a game changer for adoption. And I think the pandemic has started to focus minds and create new opportunities for technology to enhance financial inclusion. It's interesting, in the first month of lockdown last year, around 6 million people, 12% of the adult population, downloaded a banking app for the very, very first time in their lives. And contactless or remote payments in the UK now make up something like 6 out of every 10 card transactions. So we've seen fintech firms respond to the crisis and accelerate tech products and solutions that I think are going to help the most affected. So I think this is a positive aspect. So to answer your question very simply, absolutely, purpose and profit can go together.
Ron, thank you so much for your time. It's been fascinating to have you in today. I think, as in all good podcasts, I should probably say, is there anything I should have asked?
No, I mean, I think the journey that we're all on in terms of fintech is an exciting one. I would be delighted if we don't call it fintech, but we just talk about it in terms of financial services. That's when I think we will all understand that both aspects of finance, technology, and financial services, as we call them now, have just come together in a fusion. That's where the opportunity lies, because it will create jobs, it will be at the heart of innovation, and I think more importantly, it will actually serve consumers better.
Thank you very much for your time today. It's been a great pleasure.
Thank you.